In my opinion, the latter is more important than the other dynamics. The company is undergoing a slight product refresh, and I believe that some of the price discounting reports that were out there were oversold, and I believe that people were processing some of that. Additionally, you see a stock move of $20 like this one. And a company that is truly leading the way in important technology for the ensuing decades. And I believe that people occasionally look at this and say, it's a good idea to take a short-term trade on this or cover short as would be expected. Tesla's stock, which is presently trading at 233.19 per share, has decreased multiple times already this year. Although some investors remained positive about the company's future, others believe that Tesla's stock is still falling and will likely reach at least $150 before the year ends. Investors did not take this lightly. The fact that Tesla stock actually plummeted more last year than it did this year, and that the stock did recover this year, was cited by bulls as evidence. Let's attempt to determine why Tesla's share price fell in 2022 and whether it is likely to happen this year or last year. Many factors contributed to the decline in Tesla's share price, not the least of which was the decline in the tech market as evidenced by the Invesco QQQTEF, which fell 23 over the course of the previous year. That's given that Tesla's share price fell 66 during that same time frame. It is safe to assume that other factors also had an impact, as Tesla's products require a significant amount of electronics components. The numerous chip shortages that plagued the world last year also had a negative impact on Tesla. However, Elon Musk's obsession with his takeover of Twitter, which dominated the news for almost the entire year last year, may have hurt the company more than most. This is because investors now view it as a major advantage. As for what has been causing this year's decline, one analyst believes it is more price. April saw a sharp decline in Tesla shares as a result of the company's release of its first quarter vehicle production and deliveries data. Although deliveries increased year over year, Wall Street was unimpressed with the report's findings, and analysts' published opinions on the update were divided. The nearly 423,000 deliveries were deemed underwhelming by some analysts, who reiterated an underperformed rating for the stock and a 150 12-month price target. This was due to Tesla's major price cuts for its vehicle lineup earlier this year, which raised concerns in the media about possible softening demand. However, Tesla CEO Elon Musk stated in the company's fourth quarter earnings call that the lower prices were driving a significant surge in orders, and eventually investors warmed up to the idea of price cuts. As the price of the stock has soared year over year, it is clear that there have been price cuts. However, Tony Sacconaghi Bernstein believes that there will be more price cuts to come. Higher costs had caused Tesla to raise the price of its vehicles, so it made sense for the company to pass those savings onto customers through lower prices, as lower prices usually translate into higher unit sales. The wait time between placing a new order for a Tesla vehicle in the United States and the anticipated delivery window is currently short for all models, with the exception of the Tesla Model Y. Sacconaghi notes that these factors, while still low, are indicative of a challenging demand environment and may lead to additional price increases later this year. Slices Bernstein believes that shares are overpriced and has set a noteworthy 12-month price objective of $150 for the stock. Tesla stock price peaked at $153 in late April, but even though it has since surged to a current valuation of $230, investors are still not overly optimistic about the stock. In fact, numerous in the last several weeks, Tesla stock has been lowered by Wall Street banks. UBS was the first to say that the recent strong share performance completely reflects the robust demand response observed following price cuts, as well as a good executive in 2024. The reduction was to neutral. Tesla's stock dropped 0.5% in morning trading after UBS analyst Patrick Hummel downgraded his rating on the company's shares, which had been at buy for the previous 13 months. This put the stock on track for a fourth consecutive decline, and shortly after that, two more significant Wall Street banks did the same. Though Tesla doesn't precisely trade on fundamentals, Barclays analyst Dan Levy downgraded Tesla shares from overweight to equal weight, arguing that the recent rally disregarded short-term concerns about the stock's fundamentals. Regarding the position of Tesla shares in relation to The previous month, Levy raised several intriguing issues. Levy's primary argument for the downgrade is based on three key ideas. The AI effect, which could be exaggerated given Tesla's new supercharger agreements and ambiguous advantage. And most importantly, how the rally's multiple expansion represents the company's third downgrade since July. Tesla was downgraded by Morgan Stanley from overweight to equal weight with a $250 price objective down from $200. We're not attempting to end the Tesla rally. According to Morgan Stanley analyst Adam Jonas, there is still a lot of investor caution. As we have discussed, inadequate publicity for the name in a comparable. The market is now giving the stock more credit for its longer-term opportunities, according to Goldman analyst Mark Delaney, who downgraded Tesla stock from buy to neutral. However, we are also aware of the challenging pricing environment for new vehicles, which we believe will continue to weigh on Tesla's automotive non-GAAP gross margin this year. After that, Delaney said, DZ Bank cut Tesla shares from a buy recommendation to a sell rating with a price of $210. Target on Tesla side, almost 20 analysts have lowered their earnings projections for the business, emphasizing short-term hazards. Moreover, Tesla's expensive earnings ratio, while the stock's volatility and lack of dividend payments are significant drawbacks, investors should be aware that Tesla's inventory build is justified. Given Tesla's efforts to better balance and optimize its vehicle shipment process, the company explained in its fourth quarter update that it has been working toward a gradual shift toward a more balanced regional mix of production and deliveries throughout the year. As a result, the company anticipates that its inventory of vehicles will likely gradually increase throughout the year, which could lead to higher prices. It is still unclear whether Tesla stock will fall to $150 as projected, and investors are holding out hope that this won't occur for a number of reasons. Elon Musk's prediction that Tesla's sales volume may rise as a result of the company's expanding product lines is one factor that might help explain why the stock is rising rather than falling. Tesla's bright future would be hard to deny, and at the current low price, this is an opportune time to invest. It's also important to note that some analysts are convinced that Tesla is supposed to be a long-term investment. As if you prefer immediate gains, Tesla may not be for you in connection to this Wednesday. Elon Musk hinted in his master plan part duh that Tesla would be expanding its lineup to cover all the major forms of terrestrial transport, even though shares of the company have plunged by approximately 16% in August. Bush analyst Dan Ives, a longstanding Tesla bull, recently told CNBC that he is still bullish about the stock. I view this more as a sell-off post-quarter worries about China, I have said. I mentioned that the analyst noted that Tesla is a table pounder right now and that he sees this as an opportunity. The electric vehicle firm announced Q2 profits climbing 22 to 91 cents per share, while revenue climbed by 47 to $24.93 billion, which coincided with the decline in Tesla shares. Analysts predicted that earnings would increase by about 4 to 80 cents per share, with revenue coming in at $24.22 billion, up 43 from the previous year. While Tesla overall gross profit increased by $4.53 billion in the second quarter, its total gross margin decreased by 682 basis points from the previous year to 18.2 in the first quarter. Auto gross margins, which do not include regulatory credits and leases, decreased to 18.1 in Q from 18.3 in Q1. In comparison to the long-term picture, the short-term fluctuations in gross margins and profitability are actually rather small. During the Q2 results call, CEO Elon Musk advised investors to subscribe for more foreign content.